Meme coins continue to be a craze, and well, in today's video, we're going to be taking a look at 𝗕𝗘𝗪, one of the main meme coins out there today. And there's lots of speculation as to where 𝗕𝗘𝗪 could be going in the upcoming bullish market. So today, I'm going to be sharing my 𝗕𝗘𝗪 price prediction for 2025. As I get into today's video, if you do find it useful and informative, smash that like button. If you are new to the channel, subscribe, and if you haven't done so already, check out the Discord linked in the description. Guys, let's go ahead and check out what's going on with 𝗕𝗘𝗪. So there's a few things that we need to kind of cover off straight off the bat. Okay, so this is 𝗕𝗘𝗪 paired up with USDT Tether. We're on the 1-day Binance chart. Okay. Now, in order for us to be predictive over where the price action could be going, we're going to use two tools. We're going to use the Fibonacci retracement and extension tool, which is built into TradingView, which is this one just here. If I go ahead and click into settings, you can see here all of the details that I am using. Okay, so you can see all the different levels that I have on my Fibonacci retracement, and of course those extensions that are labeled on here as well. And you can see down at the bottom, I have this box ticked. This is fib levels based on a log scale. Okay, that means that my chart is in logarithmic. Okay, so as you can kind of see, the price action looks like this. If I turn it into more algorithmic, it looks like this. Not a lot of difference, not a lot of change, but if I zoom in, things start to look a little bit different. Okay, actually it's this one here. Okay, things look a little bit different if you zoom in and stuff, right? So this is what it looks like on an algorithmic level, and this is what it looks like on a logarithmic. So it looks a little bit different, right? Very, very different. I use logarithmic because obviously it makes technical analysis, in my opinion, easier. And because I have my chart on logarithmic, it's very important that I make sure that down here my fibs are based on log scale. If they are not based on log scale, you can see my fib chart just here, your fibs will also change their levels. Okay, so you've got to make sure that these two things come together nicely if you're going to try to repeat any of that. Okay, so that's the first tool that we're going to use for our analysis. Is we're going to use Fibonacci retracement. The next thing that we're going to use is Elliott wave. Elliott wave is a concept that basically tracks people's behavior. Okay, these several different patterns that kind of play out on Elliott wave. You have your 3-wave corrections. Okay, they can go in both directions, by the way. These letters and numbers, they don't really care about whether the price goes up or price goes down. I did put together a whole course on Elliott wave. It's quite intensive. There's lots of rules and things like that you need to remember. It kind of gets a little bit complicated, but when you understand it, it's a beautiful thing. It all works very, very well. Okay, I put a course together. It's linked in the description down below, 𝗕𝗘𝗪𝗀𝗠𝗏𝑐om. Go ahead and check it out if you want to learn a little bit about Elliott wave. Okay, so we are going to be using these tools to help us understand where the market is going. Elliott wave tracks the psychology of the behavior. Okay, so based on whether you see, let's say, an A wave pattern here based on buying and selling, then you should expect the B, and then you can expect the C wave, right? Okay, so it allows you to predict. If you see A wave, okay, you can then predict a B and a C wave. Okay, B waves can obviously be a little bit more complicated based on the number of different possible scenarios that do crop out. But nonetheless, those are the two tools that we're going to use. We're not going to rely on anything else. I've still got the Fibonacci, I've got the fib tools, I've got the Elliott wave price analysis tools in my arsenal here, but we also do have the EMAs for reference, but we don't generally have to use those for these long-term price predictions. Okay, so in order for us to predict out the future, we need to know where price action has been. Okay, so at the bottom here, we can see, if I zoom in right down here, we had a wick low. This was on the 22nd of September 2023. It was 0. Well, all the zeros and 60 at the end there. Okay, and of course we can see here the previous levels as well. Okay, actually, you know what we should do first? If this is the Binance chart, we should just also do some due diligence to check whether or not other charts have more data. So typically, KuCoin and Gate.io are usually the first ones to list things. So we want to check to see whether or not there's more data on those. So we're going to go to Gate.io first. Here you can see that there is more data. It's basically just this initial kind of straight run to the upside. So our kind of first data point is the 19th of April on Gate.io. And we can also do the same for KuCoin. Here you can see our first data point is the 5th of May. And so not as good. And we can check a few others if we can see any on here that might have been an early lister. better. But for the most part, I don't think it's overly that important. I will use the Binance data for our purpose of today's video. Okay. So our lows down here for the bear market low point coming in with a low of the 0.00000060, right? Okay, so good. We have a low point. We also have a recent peak. Okay, the recent peak is up here as well. Okay, coming in at that high of 1.725. Okay, so this move to the upside from 2023 up to May of 2024 was a pretty significant run. Okay, and we saw a run here of 2,775%. Okay, so this run to the upside under an Elliott wave theory structure or Elliott wave structure comes in as a 5-wave move. The 5-wave move is very easily hit and it requires a 1.618 Fibonacci extension. Okay, so we have ourselves what is known as a trend to the upside. You have a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. Okay, so we have a 5-wave move to the upside. This is very important because you don't find 5-wave patterns on their own. They're usually part of a bigger play. Now, obviously, we haven't got data to see if there was a major run to the upside. We obviously had the 𝗕𝗘𝗪𝗧 data. So if I come over to 𝗕𝗘𝗪𝗧 here, right, and bring this into view, you can see that we did have that initial kind of big run to the upside. Okay, so coming in from all the way down here, if I can snap it in there, to that initial peak right there. I'm going to go ahead and zoom in on this so we can snap it to the birth point of April 2023. So you can see there we had 14,900% to the upside. Okay, now why is that important? Well, that's important because if we then move this over to our low point over here, okay, you can see the relationship between where the price is and where it could potentially be going. And that's an important thing that we need to kind of keep in mind. Like I say, 5 waves are never on their own. So for me, I can see this as a zigzag pattern at the beginning. So we have A, B, and C structure here for 𝗕𝗘𝗪. Okay, we then have the correction coming down. Also, this one's actually a more of a corrective pattern. So it is a WXY. So you have WX and Y pattern here. And then we get into that bullish run to the upside. Okay, so looking at it, I'm going to use the 𝗕𝗘𝗪𝗧 for the purpose of today's video, I think, because we do have that initial surge that we need to see. If we measure from the top of that move, which was the 5th of May 2023, to that low move there of April of 2023, that's a 100%. It goes from 0 to 1, right, that entire move. We move this over to our low point, which was this one over here on the 15th of June. Okay, if I make that a little bit bigger, you can see it right inside there. If I go ahead and put our fib chart right on the wick low of the 15th of June 2023, that then allows us to look at those fib levels for the next moves to the upside, right? Now, typically, we would be looking for a structure to finish up in this range right here, okay? And I only use the word typically because we are seeing a few things that are potentially unfolding that are slightly different, okay? So typically we will be looking for 0.000120547 to 0.000390572, okay? However, actually it's a little bit lower than that. That's on the wrong anchor point. My apologies there. I missed the low that's actually down here. This is where we should put it. So it'll be down on the wick low that we saw on the 21st of September. Actually, no, the 17th of September, sorry. So that one right in there. So we snap it to this wick. And then if we zoom out of this, we can actually then adjust our targets to be the correct area, which would just be a fraction lower there. So I'm going to go ahead and just pull that in. It's basically 0.000087360 to 0.000283048, okay, and that would be your typical range. Okay, so straight off the bat, we can see that we have an idea that there's still this bullish potential run, which would form a WXY on a bigger macro structure. Okay, now a WXY is what is called a double zigzag pattern. Basically, you have an ABC structure in your W wave, so you have your A, and I'm going to draw this in roughly for you guys to see, B, and then a final C wave. Okay, so you kind of have something to this effect. Okay, and you can see here we have the A wave coming up, the B wave coming down, the C wave going up. We have a WXY, meaning that there's an ABC internally within the W and the Y wave. Then, of course, we're looking for a Y wave. Now, the Y wave in this particular case should be a double zigzag pattern. And as we had already analyzed on here, we don't see that playing out just yet. We actually have a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. We have a correction coming down here, which to me is a B, C structure here, A, B, and C structure here, and we're looking for reversal. Now, it's possible, of course, that this turns into a WXY, and we still have more pain in the market, yada, yada, yada. We could see something like this. I don't think there's a need to do so, though, but of course, we'll keep an open mind. Anything's breaking above our previous swing high of our 5th wave move, which does come in, of course, on that high, and I'm going to zoom right in here on that wick at the 17234. Okay, anything higher than that obviously is a breakout. Now, why is all this important? Well, this is important because our fib levels here, I'm going to go ahead and just move those ones out of the way of this structure so we can see a little bit more clearly. Okay, our fib levels would be based on the previous swing high and the swing low coming down on the Y wave, which if I can go ahead and snap in, and all I'm going to do is make sure I get that on the exact correct wick, which is actually this one right here. Okay, and if we can see this, we would move our fib levels over to our current existing swing low, okay, which would be right in here. And again, this is the importance of the log scales as well. It makes all this a lot easier. So we have our wick low on the 5th of August, getting hit with that fib. And then, of course, we can see the range here for the next move, or next zigzag move to the upside, would be 0.000167363 to 0.00036921114. Or 214, sorry. And so, yeah, that there would basically mark out our double zigzag pattern, which would be a WXY. Okay, so as you can kind of, it would be not a double zigzag pattern, it'll be a zigzag pattern, which is a 5-wave move up, a 3-wave move down, and a 5-wave move up, which of course is a zigzag pattern for our Y wave. And of course, that overlap there is the target range in my mind. So for me, it looks like there's still potential for growth when it comes to 𝗕𝗘𝗪. We're going to be looking on the low side around 1,300%, on the kind of more medium size 2,700%, and on the more bullish side around 6,000%. Okay, so there's some clear targets here for 𝗕𝗘𝗪. It has some potential to the upside, some pretty significant ones, but of course, meme coins are insanely risky. They carry a lot more risk than projects that actually have utility and a reason to hold the actual asset. So although we can still see there might be some potential for speculative investment to come into 𝗕𝗘𝗪, we want to be really aware that there is a high risk scenario here where this one does move more aggressively to the downside and you lose a significant amount of money. Of course, it all depends on your own risk tolerances as to whether you want those high risk gamble plays or whether you want to be a little bit more on the safer side. Of course, I'm not a financial advisor. I cannot give financial advice. All I can do is share my thoughts and opinions as to where I think the data in the charts is leading 𝗕𝗘𝗪 in the future. You can let me know what your thoughts are on this in the comments down below. Do you agree with my price prediction? Do you think it's got more in the tank, or maybe this is just wishful thinking? Let me know in the comments below, or join us in our free Discord server and we can continue the conversations down there. And of course, guys, if you haven't done so already, I urge you to check this video out. It's not one that you're going to want to miss.